Good weekend. Ira Epstein back from vacation for this Friday, and this is the 8th of January, 2021. Wow, it's unusual to say that, and it's obviously the evening. This is going to be your weekend edition, so I'm going to be covering the weekly charts, not the daily charts for you, and what a week it has been, right? We've now seen the capitulation of President Trump, where he's not going to the inauguration, but he recognizes that he has lost the presidency. We've seen a riot. I've never seen anything like that, called on and caused by President Trump and his son Donald Jr., if I'm correct. I watched it when I was in Mexico and couldn't believe what was going on. And I don't think either of them thought people were going to riot. I think they were called to action, protest. I don't expect that they thought that. I think I'm right on that, so I'll give the president a lot of credit that I can't imagine he'd call for a riot. But you had that happen. Then we saw a big race lost. In other words, the Republicans lost everything. They lost the 2 seats. I thought, frankly, they'd get one of the 2. They didn't get either seat at in the Senate runoff in Georgia. So you've got that. And now you're getting all the crazy action where new money coming into the market the first week of the new year. You expect that, and you get the wild gyrations. But are we going to see a stimulus package? Aren't we going to get one? Is the $2,000 going to be set out? No, some senators or congressmen don't want to do that. Where are we going? And it's just like this. The one thing that's evident, the market doesn't care at this moment about valuations. It's about there's not enough stocks. People are just buying everything. Bitcoin, $42,000. Tesla just made Elon Musk the richest man in the world this week. Go figure it all out. Wow. When we look at the monthly area chart of closes, the monthly for the month, and we're only at the beginning of the month, but we're already up 1.8%. So the first week has been phenomenal. And here's the weekly close. You're up 1.83%. And on the monthly, you're up the same thing so far. Why are they identical? Because you're at the end of a week. Got that? You got to get through all the weeks. Next week, they can start differing from each other at the end of the week. We'll see if that happens. When we take a look at this, though, just straight up and away, and this market's paying great attention to this red line, the 18-week moving average of closes. Always look at that. I determine bias of the market from where's the close to that number on a weekly chart. I do the same identical thing on a monthly chart. It's a filter for me. It helps me understand if my signals are bullish or bearish. Do I go with them, or they're just fighting the bigger trend of the bias of the market? When we come to just looking at this chart, what's the evident thing? You had an outside week to the upside. So I view outside weeks as very important. One of the things I look at is if you take out the low of an outside week, I define that as a bull trap. Bullish because the market had a week where you made a lower low than the previous week, a higher high, and you closed sharply higher in this particular case. So until that's taken out, and I would not want to see it taken out for the next 2 weeks. If it is taken out in the next 2 weeks, I will look for prices to make a run back to wherever the 18-week moving average of closes is at that time. Don't take it out, and what's my upside target? My upside target then is my Bollinger Band, and that number's, let's call it 38.68. So the bulls have control. We've got a pattern of higher lows, higher highs. We have the bias up, and we've got what's called an embedded slow stochastic. It's when a market converts from being overbought and just locks into an uptrend. When that occurs, until the red line here closes back under 80, I'm expecting pullbacks in the market will be bought. I've got the caveat out there. We have an outside week, so I'd always pay attention to that. Most of the indices had the outside week, as you can see here. Same thing. We have the embedded reading. The bias is up. The trend is up. The target's 13,270 plus. It'll probably be a bit higher than that when they reopen on Monday. Take out this week's low of 12,491. I can make an argument for price in the 18-day average to try to get back together. But first you got to do that. You've got 2 weeks to do it. You don't have to do it. In the Dow, same thing. Embedded reading, bias up, higher lows, higher highs. Looking now for the 31,518 level. I mean, Eventually there'll be a piece of news, it always happens, that you're going to get a correction off of. You don't know what it is. You and I have no idea, but it's out there, whatever that trigger is going to be. Do you play for it? No, but you're aware it can happen. Got it? That's the way you do it. And the higher you go without a correction, the more likely it's to happen. So you've got to be very careful on your feet. Do not become complacent is what I'm saying. In the Russell, higher lows, higher highs, outside week up, embedded reading. Need I say I'm bullish on everything on these charts. Where I'm a bear are on interest rates. And the reason I'm a bear is now I believe that what's happening is more stimulus, more money needed, more borrowing by the U.S. Let's assume that makes the economy grow as I would expect. Well, I would look at that to be somewhat inflationary. And I think those that are going to lend the money to the United States are going to want higher interest rates. And that's what you're seeing. Do they have to gallop sharply higher? No. And I doubt that the Fed would allow that to happen. Remember what the Fed has said. They want inflation to overshoot. They've been trying to get it to do that for a decade. They have a shot here with all that's going on. So at the next Fed meeting, would I expect a big change in policy? No. We already see different Fed presidents putting out their feelers that maybe we've seen the bottom. Jeff Gundlach's going to be out, by the way, on, I think, CNBC on, and he hasn't been on since April. And I saw that he was going to be on, I think it's Monday. I certainly want to see him. He was the super bear in the market. I don't know what his current calls are, so we'll find out. You hit the lower band. What do you think the pros did the first time you hit it this week? I think they took money off the table, and I think they're sitting pretty. Do I think they're reselling? No. You're oversold. That is different than embedded. You've hit your downside target. In the 10-year note, you're oversold. You've hit your target. You've gotten through it. Are you going to press this and bend it out is the big question. Because you have an outside week, if you were to take out this week's high, I would call that a bull trap if it occurred this coming week or the week after. If we come to the 30-year bond, it's the same thing. So both of them like that, but no. Do I ever tell my clients to go short under a Bollinger Band? Let me answer that question for you. No. Do I ever tell them to go long over a band? No. If I do, I'd like to be slapped in the face, but in my, as I learned more about Bollinger Bands, I don't remember when I came up with that rule. I wish that I had it, the date, but I don't. But I know that I don't do that. I certainly don't in my charting courses. In the dollar index, lower highs, lower lows. Now this is divergence from the daily chart, which is getting a correction phase. But this is saying that's all it is. It's not a change in the bigger chart. The bigger picture is still bearish until you lose the red line closing over 20. Therefore, I expect the pros to be selling this coming week into that rally. And I think they'll get out if they lose the embedded reading. In the eurocurrency, the market has been running the upper Bollinger Band. Now, you still have an embedded reading, but you closed near the lows of this week. Be careful. That's often a sign that if you were to open steady or lower, the way the math works, you can lose that embedded reading very easy. You want to see what this market looks like, certainly on the first prints of Monday before you make much of a decision in that market. Canadian dollar, what do you do the first time after you've hit a Bollinger Band and you back away, which you did for 2 weeks, and you went up to it again? What are you supposed to do in unison? Well, you're supposed to come out. You did miss it by, let's see, the high was 79.19, and you missed it by 3 ticks. It's pretty darn close. I know that when you're up that close, when I'm putting out trade recommendations in my full research, I will often, if you get up that close, put out a special update. You know, folks, we're close enough, just take it. Don't worry if you hit it exact. Nothing in life has to be exact. It's the zone, and you're certainly there. You have an embedded reading. If you don't take that out and you fall until that red line closes under 80, I expect there to be solid buying in this currency. Japanese yen, take a look. Higher lows, and then all of a sudden this week, Higher high, lower low. You've broke the trend of higher lows, higher highs. You were overbought, not embedded, and now you're turning that down. So you've lost the uptrend. The bias is up, but the momentum is turning down. Hooray for Hollywood! A 34% gain in Bitcoin. Unbelievable. I mean, what can you say? This all began, and by the way, just so you'll know, if we come back here, did we ever have a defined breakout? You had it right here. Do you see those 2 weeks in a row where top quadrant? Doesn't matter. Eventually you're looking to pull back, but that set off the trend to the upside. So now you've still got your embedded reading, and look at how this market has exploded. I'm hearing people talking $1 million for a Bitcoin. Last week on this, they were talking 150,000. Then it went to 300,000. And today, I'm listening on financial TV, $1 million. Okay. Can I tell you? Brent versus WTI crude. The Brent is still staying strong, and why not? OPEC is the swing producer. In the U.S., we added more rigs this week. So they're going to be the ones that keep the oil control one way or the other. And for us, you're going to see rig counts going up and production coming up. Why? At these prices, you can make money. That's the reason why. You're over $50. And very frankly, I read reports when I was in Mexico about the Saudis and what they needed for their, and I went and checked it, what they needed for their budget, and it's between the $70 and $80 area. So when they take 1 million barrels off the market, that's not something they're taking lightly, that they're doing it unilaterally. Nobody else has to do anything, but don't cheat. That will be the key. You can do your quota, but don't cheat. I think you're up at a lot of resistance. The combination of the 100-week average in green and the upper Bollinger Band, even though it's embedded, don't be surprised if you get a bit of a pullback. WTI crude, I think the pros came out this week. You hit the upper Bollinger Band, you backed away for 2 weeks, back up to it. You kept the embedded reading. What was resistance turned out to be support, and then you went up from that 100 up there. Excuse me. But you're in that resistance area, so I'd just be very, very careful with everything. Gasoline market, up and away. And what I've been writing and warning my clients, we're January. This market doesn't wait for spring for prices to go up. It starts anticipating the combination of more stimulus money, the combination of vaccines to more and more people, and what do you have here? You've got the making of gasoline demand. So you put it all together, and that's what I'm looking at. I love being back. Remember, my morning futures video, and I'm talking my subscriber video, I put these out just about every day I was gone. So my subscribers were able to see this. When people pay me money, I feel that I owe an obligation to them. I also made a change besides what I do in that. I decided to change the time of my Spider ETF video, and that's going to move from the afternoon to the morning as well. Right after the markets open for spiders and ETFs, about 8:40 in the morning, I'm going to start recording those. Why? I want the traders to get the action for that day, not for the next day. I want them to see where I'm saying buy here, sell there. That's what I'm already doing in futures. And when I looked at the two, I just said, you know, this makes so much more sense. I'll have to alter some of my schedule, and I'll do it. But I cover all this for you. And as you know, there's a scroll bar on the video that you pull to the area you want to. You let them all go. Depends how much time you have and what you want to see. $7.95 for the first 30 days. 26 of these videos for the futures each month. I put out a weekly edition also, just weekly charts on everything I cover for my subscribers as well. So if you're a longer term trader, it's there. If you're a shorter term, it's there. Do I mix and match during the week? I do. If I see that there's something that's very important on the weekly charts, I'm going to bring it in for the daily traders as well. When I say daily, just covering the markets daily, I'm not a day trader. Am I a swing trader? I certainly am. Swing could be anything. It could be that you're in now and you're out 3 weeks from now. But futures are not stocks. With 90% leverage, about everything you do is shorter term. I'm Ira Epstein. Hope you take advantage of this. Go to the word research on our website, and I'll see you all come Monday. Take care now.